Good afternoon, this is Tom Asbury with the Viper Report. It's June 29th, one more day left in the month, just after the close on Monday. The big news economically today was the pending home sales index, which was up 44.3% in May over April's pretty dismal number, as this chart suggests. Still down from 5.1% from a year ago, but is an encouraging number. It was a rough week last week for stocks, as I discussed in my latest Forbes article, but there were signs that one should not be too bearish. One was the NYSE A-D oscillator. Show here, this is one of the formulas I send out to my subscribers so they can replicate it on stock charts. This purple or blue line is a short-term 5-day moving average of the advances minus declines. You can see when it gets down here, under minus 800, it comes pretty close to a market low. It got down about not quite to minus 800 last week, but it was a sign that you shouldn't be bearish right in here. This is something we keep in contact with. We mention it frequently in our interim updates, which we're having at least once or twice a week. If we get back up here into the plus 700 to plus 1,000 area, and we haven't taken out this peak up here, I'll be getting a little more concerned. We were doing some buying last week in individual stocks and ETFs. The ITB, that's the iShares U.S. Home Construction ETF, was one we were buying. It was up near resistance at the start of last week. Declined a little longer than we expected, but had a nice turnaround today as it closed up 3.67%. The volume here, almost 6 million shares, was well above the average of 3.5 million shares. That's what we like to see. It needs to have another strong close in the next day or two to confirm that the correction is. Last week I wrote an article about yearly pivot levels for the key 11 sector ETFs. Now, yearly may seem a little too far out for many of you, but I hope you'll take the time to read this. You can see that one of our favorite ETFs over the past few years has respected the yearly pivot resistance as well as the pivot support. I would suggest you print out this table. It gives you the yearly pivot, yearly S2, S1, R2, and R1 support for the rest of the year. And I think that will find very valuable information. These numbers won't change as the year progresses. The action last week in many of the financial stocks, like the XLF, the financial sector ETF, or Goldman Sachs, was quite negative. After the close, they were reporting their dividend plans going forward. Technically, they don't look very good. So I'm becoming a little more cautious on the overall market, as it's hard to see that the market's going to move substantially higher from current levels without the financial stocks also moving higher. If you'd like specific trading advice in both stocks or ETFs, hope you'll go to Viper Report, the Viper ETF Report. Both are just $34.95 per month. You get at least 2 reports a week plus interim updates, and you can cancel online at any time. I'll get back to you over the long weekend. Hope you have a great week. It's short trading, and there's tons of economic data out there. This calendar from MarketWatch shows you some of the stuff that's going on. Chicago PMI tomorrow, National Home Price Index, ADP Unemployment Report, ISM Manufacturing, FOMC minutes, and of course on Thursday we get the non-farm payrolls and the unemployment rate. So I would buckle your seatbelts. It could get interesting. Thank you.